Hello, my friends. This is Jorge Gonzalez with Team Data of 8. I'm a realtor in Miami, Florida with Keller Williams Realty. Have you been dealing with this health issue, and has your income been affected, and have you been thinking about maybe skipping mortgage payments? Have you heard about the programs that the CARES Act has let out? And maybe you were thinking about, maybe I should take advantage of mortgage forbearance and skip mortgage payments for a while. Well, this is an update to a video that I did back in March. So stay tuned and take a listen. When we were all sent home from our jobs and our kids were sent home from school and we had our new stay-at-home orders, especially back in March when this was kind of a novelty and we were wondering, how long is this going to last? That's when clients started asking questions about their mortgages. I even heard also some of my clients that are landlords wondering about rent, from their tenants. So a lot of these type of questions started to brew up to the surface. And I did a video back March 31st, I believe, 2020, that addressed the initial questions that I was asked. So I did a video regarding what mortgage forbearance was, mortgage deferments, and what things to be careful about when considering or taking advantage of mortgage forbearance. I invite you to go ahead and take a look at that video because it is still relevant. This video is meant to be an update of the information that was given at that time. That information on that video is not incorrect. It's just we now have more information based on the CARES Act that has been passed. Two main consequences to taking advantage of a mortgage forbearance program were, how is the skip payments, how are they going to be paid back? In other words, what are the payback terms of a mortgage forbearance program? And what consequences would there be on your credit score, especially for the long term? When I did the video back in March, these questions were kind of left unanswered. We now have the CARES Act that has given more clarity on how these things are going to be addressed. Key question: who is the owner of your mortgage? Not everybody knows the answer to that question. I talked about knowing who your loan servicer is. That's the person or the company that receives your mortgage payment and manages your mortgage payments for you. What you need to do is make a phone call to your loan servicer, your mortgage servicer, and find out who owns your mortgage. Why is that important? The CARES Act only addresses mortgages that are owned by a federally backed, a government-backed entity. You've heard of Fannie Mae, Freddie Mac, FHA, VA, and less so here in Miami, Florida, the USDA. All of these are mortgage buyers that are government-backed. So the CARES Act only applies really to those entities because, let's face it, those are the entities that they have control over. So in the link and the information in my email below, you're going to find a link for a loan lookup. You can go online, you can type in your address, go to Freddie Mac, Fannie Mae, and all of those different links, and find out if they own your mortgage. But it's probably easier to just pick up the phone, call your loan servicer, and that's information that they need to be able to give you, and they should have it handy. If you don't have a mortgage that is owned by a government-backed entity, could be a private lender, a bank that has it on their portfolio, in other words, it's not federally backed, government-backed, then the CARES Act provisions don't necessarily apply to you. Not at least by force of law. Now, most banks are going to have some sort of program that's similar, but you do need to address that on a one-on-one basis with your lender. So what does the CARES Act say about your payback terms? Well, in a traditional mortgage forbearance, and one of the things that I addressed in the first video is that in a traditional forbearance, if you skip mortgage payments and what the provisions are in the CARES Act, it allows you to skip up to 6 months worth of mortgage payments, and then if necessary, even apply for an extension of another 6 months. In other words, you could potentially go 1 year without making mortgage payments under your forbearance period. Traditionally, at the end of your forbearance period, you would have to come up with all of the skip payments in a lump sum at the end of that period, which, let's face it, for most people, that's not a realistic option. So the CARES Act is allowing for options such as a payment plan that allows you to take the total amount of payments that you've missed, that becomes a total debt, and either spread it out throughout several payments, could be an additional 12 months, and spread that out, and that would be an amount that you would pay on top of your normal mortgage payment. Or what most people think is the norm, and it is available, is to have those payments tacked on to the back end of your mortgage. So let's say you have a 30-year mortgage, that's 360 payments total. Well, they may say, okay, you'll have, instead of 360 payments, you're going to have 372 payments, and then the back 12 payments are you paying back the payments that you missed in 2020-21. Hope that makes sense. That's not automatically given to you. That has to be applied for, and this is one of the caveats, you're going to have to prove that your hardship was as a result of the health crisis that we've had in 2020. That the CARES Act was meant to relieve. So you're going to have to prove that. So if you didn't really lose your job or didn't really have a severe income loss, you might have a problem with that. And so be careful. That's one of the things I say, be careful. All of these plans also remind us that if you can make your mortgage payments, then you certainly should make your mortgage payments, because there are repercussions down the line. The other thing is, how is this reported to the credit bureaus, and will this affect your credit score? Now, the CARES Act is preventing, again, lenders that are controlled by the government-backed loans by Fannie Mae, Freddie Mac, FHA, VA, etc., from reporting your missed payments as delinquent. That's basically what they're preventing them to do. They can't report those missed payments as delinquent. But any lender, let's say in a year or two you want to refinance, or you want to buy another home or whatever and get a new mortgage, or even you're going to apply for an auto loan or a lease or something like that, the lender that is going to review your credit report, not necessarily only credit score, but they also look through your report, they can see the history of payments. In a forbearance, what they're going to see is payments missing in that month-to-month reporting from your lender. It's not going to be reported as a delinquency, but whoever's looking at your credit report and debating whether they should offer you credit, they're going to see missing payments. There may also be some note on your credit report that indicates that you are in mortgage forbearance, but it's not reported as a delinquency, right? So the people who evaluate your credit report, they're not dumb. They know how to figure all these things out, and they're going to be looking for it. So even though it's not going to be reported straight up as a delinquency, anybody who knows about credit, they're going to be able to see if you did miss payments. And each lender, they can apply their policies as they see fit as to whether you're going to be credit worthy in the future for their mortgage or their loan program for you. So those are things that we're going to have to deal with. We still are not going to know the long-term consequences of taking mortgage forbearance until the time comes. And we see people, either dealing with these situations in a positive or negative way. So there's a lot to cover here, certainly too much to cover in a short video. I invite you to give me a call, send me an email, send me a text if you have any questions about this, and I can help you find the answers and give you maybe some clarity on these confusing issues. And again, just be careful when taking advantage of these situations, and because sometimes it'll come back and bite you, right? And I don't want that to happen to you. But there are options for you if you really do need it. So thanks again for taking a look at my video. I hope it's helpful to you. Please remember to be on the lookout for future emails and videos from me in the future. And I wish you all the best. Stay healthy.